All right, so it happened. They raised the 75, the almighty 75 basis point. Now, what happened next? That's a question everyone has so far. I think we have to really appreciate the fact that it might actually go to test the bottom so far. That's what the market might do. So if we have that, we don't have to translate that as pain. A lot of guys now that were calling the bottom back in the day, they were calling now for more pain. It's not more pain. It's just what has to happen in order to protect. Now, I did enjoy a little bit of the narrative during yesterday's Fed minutes. When you look at what Powell said, we might think to pause. And I think the use of the word pause actually fueled that little bit of a market rally. But then we just go back to the wake-up call. Things are going to stay like that for a little bit. Now, there's one of these chops, one of these banks that they basically said rates will go up, probably stay under 5, and will stay at that level until 2024. Think about that, 2024. So this is one of the things you have to keep in mind. And I've been sharing my videos. Maybe you like the idea, maybe you don't. But the reality is that at 330 million people right now, and after years of very low interest rates, we don't really need to have inflation set at a 2% goal. That's the Federal Reserve goal. And you may think that it's actually, wow, great, they're gonna just do that. But if inflation doesn't come, if it doesn't go down as fast as we expect, we need to, overall, the 100% statistics, no miss on this one, the Federal Reserve will hike up to the point that the interest rates are above inflation. And that's going to be very bad. Now, we now understand that. That's what it is. So what are we going to do? We have to fight the Fed. But we have to fight the Fed understanding we're not fighting the fact that, okay, they're going to hike interest rates. No, it's about avoiding predicting bottoms and tops. We're just going to trade what's on the tape. And on the tape right now, this is what I have for you. Okay, let's pay attention. Look at that. It looks pretty bad. We have right now in front of you, I have QQQ weekly and SPY weekly. It's not looking good. Now, how do we have to react? Either we buy some puts. That's pretty simple. It's not difficult. Or we look for companies that are exhibiting weakness. Yeah, weakness. They have weakness in their weekly and monthly charts. So today, I want to go over a few names that you may want to play with and give you what's next, or in other words, who's next, right? So playing the short side, let's take a look at one that I think it should be on the map. GPS, the gap. I don't want to say anything about what happened between them and Kanye West, but just keep in mind that happened, okay? That happened. So right here, you see that we have a potential for a continuation all the way to this level. Probably go back to this small liquidity on July of this year. That's pretty much, this is just retesting the previous lows. And wouldn't be surprised if we go all the way back to the lows, COVID lows, because you will be matching that liquidity. All that fuel, all that free money, it's gone. So we're going back to reality. Those 2 years of happiness are over. So at this point in time, you do want to position yourself looking at the puts. If you are aiming to look for that weekly money, if you have to, then go to quote media, go GPS, the gap. And I will look for an opportunity, sort of an idea how to play that next week. I can do an 8 at the money position. That shouldn't be a surprise. So the 30th, I look for the put options, the area, probably take the 9. That's only cost me so far. Looks like the last trade was 30 cents. That's $30. Open interest, 312 contracts. Not a big deal, but absolutely this is in a position. This is a put. So I will take it at the money. Yeah, and I'll probably look to make 50% of my money in this particular trade. 50%, that means that if I'm buying at 30 cents, I'm looking to sell at 45 cents. And if it doesn't work, I can also set a stop loss. You don't have to lose it all. If you want to protect your money, if you're going, for example, with $500, with $1,000, okay, then In that case, you want to protect your money. So therefore, you will do this with a stop loss. And my stop loss, in the case of this option, probably I will take, it could be a very hefty stop loss. But I will say 30%, if that's the case. Depends how you want to play this. The low of this contract, 13 cents. So that serves you as a reference. But so far, if I take this position on a weekly opportunity, judging that the gap doesn't have anything right now that will kind of pull investors out of a hat and make them invest in this company. So I'll probably say, you know what, I just get this at the money. I'm looking for a 50% return on my money in a week, okay? That's one name that I think easily can retest this low and go back all the way to April 2020 lows. It shouldn't be a surprise. And one thing that I noticed when it comes to the gap, the book value is $6.28. So it would be a much better risk, not investment opportunity, much better risk to actually put some money to work on the gap if you actually get it closer to $6.50. That's not the case right now because the stock is selling still very expensive for what we can get from the gap in the future. It's $9.15. So that's why I will probably go for a week and I will take this put expiring next Friday. Another day that I would like for you to pay attention if you're looking for ideas today, it's AFRM Holdings. One of the big situations that this company is going to go through, I think same like Square, now called Block, pretty much going back the same structure, very bearish on the weekly. And you can see we have a massive rejection at 61.8%. So going back to $16 wouldn't be a surprise. The same process, I take quote media, get a quote, AFRM, okay? AFRM Holdings. And now I'm gonna look for next week expiration. Go to option chain. There you go. And now, let's go to September 30th. And I will also take a look at potentially judging based on the open interest. I will take my chances at the 20. Okay, I've been playing the 20 for a couple of weeks. I will do that again today. And I'm just sharing this with you. Low of the contract, 30 cents. Open interest, 1,319 contracts. And the high was 171, same way. I probably look to make 100% of my money because the contract high serves me as a guidance. It's just a guidance, okay? It's not like this is what's going to happen. No, this is just a little bit of guidance. And right now there's a massive, the market is not really rotating to the upside, it's rotating to the downside. So that put a lot of pressure in companies that they're not exhibiting any strength at all or no reason for you to risk money. So ticker symbol AFRM, AFRM Holdings is one of those companies. Now remember, the BNPL, buy now, pay later business model is going to be under pressure because regulators are coming for them. So that can be also another reason to stay away from this particular stock in the short and medium term. So we want to play that opportunity on a weekly basis, and we'll look to get this for 88 cents. Pay no more than $1. And in the case of the GPS contract, the lower the better. If you get it for 30 cents, that's amazing. But if not, pay no more than 40 cents. And if you get it for 40 cents, then you're looking for a 50% return. You're looking to sell at 60 cents. That's very important to understand. So I will come with another video today. Let's take a look what's happening with Bitcoin. Let's take a look at levels that you may want to have on your desk so you know exactly what will happen with American technology. That's the QQQ, the famous Qs. And of course, what's happening with the S&P 500. There's a few gaps that it's very important to know to the upside, but I also think that we shouldn't be surprised if we go back to retest the lows of the year. That wouldn't be back. And the reason that wouldn't be back, let me just share with you before I finish this video, is because if you do that, right? If you do that, we might have a second rally. It doesn't have to be as high as this one, but it potentially can create a second shoulder. I will repeat this information in the next video. And if that happens, you have a rally that can be at least a 14% rally. But the trick at that point in time is that this will build what we call, and you can see, this will build, just have it for you, a head and shoulders pattern, right? And that could mean that if we were to break these lows, then we will have a lot more downside in 2023. So keep that in mind. And I will talk more about that. I will expand, repeat the same information on my next video, but there are certain levels that I want you to know that they exist and you should be paying attention. So those are the names I have for you today. GPS, here's the contract one more time. I will add that information in the description of the video. And same, you have AFRM Holdings. Remember also, I will include my first, actually my latest training webinar with Steve Place, where I talk about what I do at the Market Surveillance Alliance, how I do it. And also on the next video, we'll talk about our day trading service. We're gonna expand within the same house. We are going to expand to day trading for those of you that have been calling for day trading opportunities. Guys, thank you so much for watching. And remember, someone always knows.